Monday, September 25th, last week of September. We always start out, and this is Market Analysis, Stan Ehrlich. We always start out with the stock market indexes, typically the spider. So again today, the main topic and the most important situation we have is the head and shoulder top progress and the expectation that we should have again this year another October low coming just in 2 to 5 weeks. Real soon now, right around the corner. We're on our way down. It's working out so far, so good. Today we have a new low, and this new low is actually since the head and shoulder top, which has a first shoulder high in the middle of June. This is a new low since the beginning of June. So the whole formation is now above where we are at the moment. The head of the formation was a ER sell signal. The high exact day, July 27th. And we also caught the low on October 13th of 2022 to the exact day with this technique, ER signals. Now, the last shoulder high was on September 1st, the beginning of this month, and it itself was the head of a smaller 3-week head and shoulder pattern, which started August 24th for the first rally high, then the top 9-1, and that 9-1 high was the last shoulder on the 3-month pattern. And then we have another small shoulder on September 14th, only a couple of weeks ago, and that finished the smaller 3-week pattern, which has already come true. In fact, that was last Thursday. It dropped as low as it was supposed to, and now, of course, more, which caused the breakout of the larger pattern, and it has a minimum downside objective of 406. I'm hoping for it to occur around 406 or lower, somewhere in October, maybe the middle, but I've seen 30 or 40 of these October lows, and they have been sometimes on the first day of October, sometimes on the last day, occasionally a little earlier than October, or maybe just the beginning of November also, but not usually. So it's coming. Today's low is in oversold condition for the third day, which started with a downside breakaway gap on Thursday. Friday's high was at the neckline, and it closed lower after a little bounce. And today we're trying up $1.15 at the moment, and it is 10:20 California time. I'm a little bit late today, sorry. And I just don't see anything yet that causes me any concern. I'm totally expecting to see new lows for the move down below today's lows this week, maybe as soon as the next day or two. Today, tomorrow, certainly by Friday. But the problem, not really a problem, the situation is we're a little oversold, so you should expect a little bit of stability or rally. Now there's a gap to close. The problem here is the gap is above the neckline, and you're not supposed to go above the neckline once you're closing below it for the downside breakout, which happened again on Thursday of last week. So the high of Friday is pretty much about as much as I'd like to see, if any more than we have already. And I'll show you the 1-minute chart for today so far. We gapped down a little bit on the opening here, rallied to close the gap, and then tried to make a new low. Didn't quite do the job. Rallied a little bit more, and now having some problems here around 431 3/4. So, you know, maybe there's going to be a little bit more rally. Maybe there isn't. I don't think so. It's a hard call. We got gaps to close. Some of them are above the neckline on the DIA. The same situation here. A little bit of a gap above the neckline when it gapped down on Thursday of last week. We broke out of the pattern. It's very similar to the spider, except that the net strength here is only 14 ticks lower on the day, not even higher at the moment. So the DIA is definitely weaker than the spider at the moment, but hey, big deal. The spider's only up 1 point, 0.91 here, upper left-hand corner, real time. So what about the Qs, which is up 0.81 ticks? And it does have a gap above the market, but the difference is the Qs and the NASDAQ have not broken out of the pattern. Their necklines on the NQ and the QQQ are slightly downward slanted. And so this week, I'm expecting the bearish breakout on the Qs and the NQ. So let's see how that pans out. And there was an anomaly type of bullish engulfing on Friday. Now this is, I don't recall, frankly, seeing this recently in the last few decades. So you do have an outside up day. It does follow the exact rules, but it's a weird variation. So I'm discounting it and telling you that that was not really particularly trustworthy if you take a look at it in great detail. I'm probably going to white it out, so to speak, for tomorrow's discussion, so we won't even see the green. Anyway, the market made a new low and is coming just simply closer to a bearish breakout, and momentarily just a tiny bit higher on the day, up 77 cents. I'm not going to be surprised if all of these index don't come down close to the low and or make new lows yet today. What about the Russell index? Now the Russell is a little bit different story here. That's got its head and shoulder top. It broke out early last week, not on Thursday, and has been down that breakout downside day, the next day, the next day, the next day, and today is the first day that it's able to bounce any at the moment. And it's bouncing kind of off of a little support area, which was a closure of an old gap. So I'm now going to turn this thing very translucent so we won't see it very obviously. It's done. The gap was closed. I talked about that happening, gosh, when it happened way back in June of this year. So it's time to bounce. Now, if the Russell bounces and closes its gap, there's no problem with that whatsoever. It's way below the neckline. I think we're going to get a little bit of a bounce here. I'm not sure. I wouldn't be surprised if everything just simply fell apart again. The problem with the Russell is the minimum downside objective is testing the lows that we have seen in the last year and a half. Remember, we bottomed out in October of last year, and there was, for the Russell, another low, almost the same prices in June of 22, and we made a slightly lower low on October 13th, the very lowest low. The minimum downside objective for the Russell is 166. The bottom, a double bottom, was 162. So we're going to come down and test major historical support on the Russell if everything pans out during October, the low coming up that I'm expecting and watching for, and we'll see what happens. So I have no problems with the way this head and shoulder top is developing in the major stock indexes. Let's go to futures. Here we go. Now, of course, the E-mini is an index as well as the futures contract, and a very popular one at that. We broke out to the downside on Thursday of last week, had a little bit of a follow through on Friday, and today we're still below the neckline. Now a problem. I'd like to see it stay below, and if it rallies above, go back below it on the close. That's what happened on Friday. And that's it. I don't really want to see a close above that neckline. That is not supposed to. I've seen examples where it happened and it still worked out in the end, but they're unusual. The minimum downside objective on the S&P E-mini is 4,000, let's call it 110.20 area. And by the way, these downside objectives on most of these indexes end up being approximately a 50% retracement of the long-term bull market from last October's lows to the recent highs we saw at the end of July, was it? Yeah, July 27th. And we got bearish engulfing ER sell signals for the E-mini on the exact high day. So these signals can be super profound. It's hard to tell at the time that they happen, but that's the case in retrospect. So that's the way I see it in the indexes for the next several weeks. Let's look at the next chart, and that would be the NASDAQ. I purposely did not draw in the arch marks for the shoulder, the head of the formation, and the last shoulder, and that being by itself a small 3-week head and shoulder top. I just left it with only the neckline, which we have not quite broken below yet, like I mentioned on the QQQ, same kind of thing. But I do expect it to happen this week. Tierra del Fuego, head south, is what I'm saying. Next chart is bonds, new lows for bonds. The way the bonds go down is kind of the way the stock market tends to go, because this implies higher rates, which the implication was set forth last week with the FOMC commentary. So 10-year notes, also new lows for the move down, higher rates implication. I'm not super bearish on interest rate futures. I think they're going to be more or less grinding their way down for another month, maybe less. But oversold conditions at the moment, and both are likely to produce a little bit of a rally, only up to the lows of August, probably. Next chart, crude oil and energies. Overbought conditions abound for much too long, typically speaking, and finally we're seeing some indications that this is going to top out. But I'm only looking for a move back down to 82.5, because that's really good support, and this is a major upside breakout recently. And then higher probably after that. Next chart is heating oil. Same kind of commentary, overbought conditions producing a downside break, and this is almost maybe a tick or two new low since that overbought condition a week and a half ago. And there's a very good support area I'm expecting to be tested and then to turn back up again like crude. Next chart, natural gas. Kind of a bore. Major resistance stopped rallies in the last few months since April, May. Support areas have held on the downside. We're between a rock and a hard spot. No comments. Next, gold is going sideways a little here. Looks like a pennant formation, frankly, which are usually continuation formations, and we were headed down before it started to narrow into this kind of a pennant. I wouldn't say it's the greatest example. One major factor here is we're still staying above a previous bear trend line, and you have to keep an eye on that. So I'm not sure what happens next here. So I'm going to be waiting for something new in gold and silver. We had a buy signal a few days ago. It didn't work. We have a small loss right away. We have slipping significantly today. The longer term trend seems to be down. The best signals I've had for months now have been the sell signals. Two good, very good buy signals produce decent results, but the trend is flat to down. So testing support could give us another bounce, but I think this could break into new low ground for several months, maybe in the next week or two. Next chart is platinum. Same commentary here again. We did last week try to close an old gap. It came fairly close, but didn't quite do the job. Sell signal on the top of that rally. We got a buy at the bottom of the break, essentially. So for a few good signals recently and two good buys and a sell. So what now? Probably dribble back off some more to 894-ish, and then we'll see. And that could happen real quickly. Next, high-grade copper. New lows into a support area and not quite oversold, just teasingly close to being oversold. So I'm looking for a little bit of a bounce here, super close to oversold in a support area. I'm not getting it yet, but I'm looking for a buy signal. Next, soybeans. Now down to the bottom of the big support area I've been talking about for months and months now. We need to hold at the bottom, which is 1282 and change, which is very close to today's low. And we are currently holding almost unchanged at the high of the day. So it looks like it is trying to turn around. If I've got a rally above Friday's high, today I would have a bullish engulfing buy signal, which I'd love to see under these conditions. So looking for a rally. Next, bean oil, buy signal on Friday did not work. A little disappointing. It was in support, classic spot for it to happen, and for it to work, it didn't. So today we have a small day trade loss on the ER3, and I'm sure we're out even quicker on the ER1 from a long position on Friday. Now, those trades from Friday, ER1s, could very well have made a little money, but they didn't lose much, I'm sure of that. So what now? We're testing support. This double top formation has some appearances of a double head with a shoulder high on July 5th and a shoulder high on September 15th. I've drawn the neckline, which is right smack dab at today's lows, which is a new low since the middle of June. If we close below today's lows, we could have, it'll look like a bearish breakout of a unusual head and shoulder pattern with a double top being the head of the formation. And of course, we got a sell signal on the second high. So let's see how this pans out. We could have a downside objective easily of 50. Next, meal. Hasn't quite tested support, and it hasn't quite gotten oversold. So I'm looking for it to dribble back down a little bit more, as I've been talking about now for a while. Overbought conditions in resistance area stopped it again. And here we are back down here again. So let's see how it acts when it gets a little bit lower. Next, corn and wheat, grinding slow downside bear markets. Corn could get a little bit more bearish, a little faster. And that's exactly what I expect this week probably. And wheat on this chart has already done that. So I'm looking at corn like wheat looked like 3 or 4 weeks ago. Next, cattle, overbought, looking for a top, can't seem to get a grasp on any particular sell signal per se. You've got divergences, no new high in the indicator for the last couple of thrusts into new high ground in the price, but I got to wait a little, but I think it's topping out. Next, hogs topped out at resistance, not quite overbought though, and is now not holding where I kind of would have expected. On Friday it dropped below some support. Now it looks like it's going to challenge 69 or 70 flat real quickly. If it breaks below that 69 level, 69 and a half-ish, we've got a downside breakout and the beginning of a bear move. Next, OJ. Thursday, I screamed bloody murder. Overbought conditions again, bearish engulfing, classic ER buy signal. The high of the day on the sell signal was 345.80. The next day, we have a high of 345.70. Missed my protective buy stop or stop loss. I like the phrase protective buy stop more. And we are now trading below Friday's low. All I want is for it to start to drop a little bit more to begin to lock in some good profits. We are short ER1, ER3, and profitable in ER3 case. The short we sold on Friday, which closed with a teeny weeny loss. It looks like a few ticks. And today is off and running. Great trade so far. Not a lot of money, but this holds a lot of promise. Next, cocoa. Overbought conditions, turned around, false bullish breakout, dropping like a rock here. I'm expecting it to come down to my little blue line at 3,310. Next chart, coffee, challenging the bottom of the support area, getting very close to oversold. It may turn around again. We got a buy signal on August 18th that worked out okay. Wasn't a very big rally, took a while. Then we had a test of the same price lows with a bullish engulfing, but we weren't quite oversold, so close. And I would have had a green bullish at the bottom of the at the bottom of the break at the the double bottom. Both lows would have been green. Anyway, the bullish engulfing did produce a rally. Overbought near the high of the resistance. Now we're back and forth like a ping pong ball. I think we'll maybe bounce off of the bottom here, very slightly lower, or you've got yourself a serious continuation of bearish probabilities. Next, sugar the sweet. Now we're breaking down fairly well, but we're at a support level. I should have drawn in a support level in here across these old highs in April, May, June. Excuse me, but I didn't. I probably will. We're not oversold, so I could easily see this drop off a little bit more. Looks like there's maybe some long-term bearishness involving here, getting involved. A little too soon to say. Not super confident about how much more of a break we might see. Trend is obviously still up. Let's see what happens. I think it's going to bounce off of something in here. Maybe down as low as 24.25, and then turn up to new highs. Next chart is cotton the rag. Resistance again on a rally, but very neutral RSI. And my RSI is the subgraph below here, and it is a custom version of Wells Wilder's relative strength index. I have a few twists that I like. I learned RSI from Wells Wilder himself in the 70s and 80s. Next, bearish breakout on the E-mini. We talked about this before. And lastly, the October lows. We're coming into October, which is the green bars. They do start at the very first calendar day, trading day of October in each year, and stop being green at the end of the month every year. So this one's coming up. My prediction is 406, 407, and around the middle of October. We'll see what happens. So far, there's the 3-month top. There's the bearish breakout, and we're twiddling around a little bit below the neckline at the moment. Spider's only up 75 cents. The DIA is back down 30 cents, and the Qs are up the exact same number of ticks as the Spider at the moment. Okay, so we'll see how this pans out. It's going to be real interesting. The October lows, exactly the middle last year, the very beginning of the month the year before, the very end of the month the year before, the early part of October the year before, the end of the month the year before, the end of the month the year before, just a little after October the year before, and that's going back to 2016, and early in the month on 2015, and we could spend a lot of time going through all of these historical evidences, going back as far at the moment on this screen to October of 08, the bottom or the beginning of the bottom of the subprime loan debacle crash, which actually finally bottomed out on March of 09. And an incredible bull market after that for many years. Okay, thank you. Mañana, tomorrow.